What if I told you one of the biggest financial shifts in history has already started, and most people haven't noticed it yet? China is reducing its dependence on the US dollar. Central banks are buying gold, and global alliances are quietly changing the financial system. This isn't a crash, this is a shift. Let's start simple. When people say China is dumping the dollar, they don't mean selling everything overnight. It means reducing US dollar reserves, buying other assets like gold, trading in alternative currencies. China has historically held large amounts of US Treasury bonds, but over time, it has been slowly reducing those holdings. Why? To reduce dependence on the US financial system. To understand the impact, you need to understand one thing. The dollar dominates global trade. Oil is priced in dollars. International trade is settled in dollars. Central banks hold dollars as reserves. This gives the US massive global influence because if you control the currency, you influence the system. Now the question is, why is China moving away? There are three main reasons. 1. Geopolitical risk. Tensions between China and the US are increasing. Holding too many dollar assets creates dependency. 2. Financial control. The US has the ability to impose sanctions. Countries want to reduce exposure to that power. 3. Long-term strategy. China wants to strengthen its own currency and influence global trade. So instead of relying on the dollar, it's building alternatives. Now this is where things get serious. The group known as BRICS, Brazil, Russia, India, China, and South Africa, is playing a major role in this shift. Their goal is simple: reduce reliance on the US dollar. How? Trading in local currencies, building independent payment systems, increasing gold reserves. Some discussions even include a common BRICS currency in the future. This doesn't replace the dollar overnight, but it creates an alternative system. Here's something important most people miss. Central banks, especially China, are buying gold aggressively. Why? Gold is not controlled by any country. It's a neutral asset. So instead of holding dollars, countries are shifting to gold for security. This is a classic move during global uncertainty. Now let's talk about impact. If demand for the dollar decreases, borrowing costs can increase, inflation pressure can rise, global influence can weaken slightly. But here's the key point. This is not a sudden collapse. The US dollar is still the strongest currency in the world. However, dominance can slowly reduce over time. This is where it becomes personal. A weaker dollar over time can lead to higher prices, inflation, reduced purchasing power, volatility in investments. It also affects stock markets, commodities, global trade. So even if you don't follow geopolitics, it affects your money. Let's be clear. This is not 2008. This is not a sudden crash. This is something different. A long-term transition from single dominant currency to multi-currency global system. And transitions are slow, but powerful. Scenario 1. Dollar remains dominant. US stays strong. Alternatives remain limited. Scenario 2. Shared global power. Dollar remains important. Other currencies gain influence. Scenario 3. Major shift. BRICS system grows stronger. Dollar dominance reduces significantly. Right now, we are moving toward scenario 2. Here's the truth most people don't realize. Money is not just currency, it's power. And when countries start shifting how they store and trade money, global power shifts with it. So yes, China is reducing its reliance on the dollar. Yes, BRICS is building alternatives. But this is not the end of the dollar. It's the beginning of change, a slow, strategic shift in the global financial system. Comment below. Do you think the US dollar will stay dominant or lose power over time? And subscribe for clear, no hype finance and global market explanations.